Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Dave Erfle and we're talking precious metals as gold continues to hit all-time highs, now trading close to $2,700. Silver is drastically outperforming gold today as we're recording this on Tuesday, as silver's up almost $1.50, trading right around $32.50 an ounce. Even copper's doing really well today. Look, it's a strong environment for metals broadly. And some of the stocks are joining in, but we're still not seeing that big move in the juniors or even in the vast majority of stocks. Dave is the founder and editor of the Junior Miner Junky. Dave, just take us through this really historic run by gold here. Keeps on hitting all-time highs, and this year is going to be pretty spectacular considering we entered the year right around $2,000 and we're up to almost 2,700 right now.
Yeah, I mean, gold's got everything going at its back now, the wind blowing at its back now, geopolitically, macroeconomically. Now the Fed has finally lowered, and not only have they finally lowered rates, but they started off with a 50 basis point rate cut, basically caving to inflation as it's nowhere near their 2% target yet. So that was a panic move. I think the Federal Reserve saw that the yield curve reinverted while they were on blackout. And that's basically a telltale sign that we're about to go into recession. Once the yield curve inverts, that's a warning that we're going into recession. Well, it's been inverted for over 2 years. But when it reinverts, that's historically when the recession began. So the Fed saw this. I think that's a big reason why they did the 50 basis point rate cut, not to mention the debt situation, which they can't control. The U.S. government continues to run I think it's $1.9 trillion deficit, and with no intention of paying any of this off. So the gold price is seeing all this, and not to mention that the geopolitical situation around the world, especially in the Middle East, and the chaotic presidential election, which I don't expect either side to accept the result. The gold is sniffing all this out, and it just continues to make all-time highs. I think today was its 37th daily all-time high. So gold is doing its job, and silver looks like it's finally catching up here. 32.50. I think is if we get a quarterly close, we're looking at the end of the quarter here next Monday. So we got 4 trading days left. So we could very very easily see the silver price make a quarterly close above 32, and gold futures make a quarterly close above 2,700. That would get a lot of people's attention in the generalist sector, I would think. I mean, it looks like the gold price is going to average over $2,500 on the third quarter here, and in November, that's when earnings season starts for Q3, and we're going to have our third consecutive blowout quarters for these miners. And generalist funds, how much longer can they ignore the gold sector? I mean, they're buying ETFs. Generalists are starting to buy ETFs. As soon as the Fed started that rate cut cycle, the ETF inflows have started to come in from the West. So that's happening. But gold stocks, they're still not really getting as much love as they should.
Well, Dave, let's dig into that topic a little bit more because you're right. Today, gold tagging 2680 for the quarter, the third quarter. It's going to be the highest average quarter we've ever seen, and the miners have the biggest margins we've ever seen. Most of these companies have $1,000 plus margins, average cost around $1,500, $1,600. Again, we're well north of 2,600 today. So with $1,000 margins per ounce, and some of the royalty companies have 2,000 an ounce margins. I mean, you would think that more generalists would be waking up to the revenue generation and the cash flow generation of this sector. We thought it was going to happen in Q1. We thought it was going to happen in Q2. Could Q3 be the quarter, Dave, where we finally see generalists follow the sector?
I think there's a very good chance of it. Because also, Shad, you got to take a look at the CPI rate adjusted gold price. When gold ran up to 50 in 1980, the gold price has yet to reach its CPI adjusted high that it reached back then. That was 45 years ago. And it's on the cusp of doing that right now. That just goes to show you exactly what you're talking about. The margins for these miners are going to continue to go up because of that. Gold compared to the CRB index, gold compared to the oil, the WTI oil index, they're going straight up. So that's showing us that these miners' costs are coming down and their margins are going higher. Will this be the quarter? I mean, I would think so, but we really need to see the stock market roll over for investors to start realizing why the Fed cut rates 50 basis points, because there's a recession coming, instead of what they feel the result of a rate cut will be to the stock market. I mean, if you take a look historically at the stock market, it goes down during rate cut cycles and it goes up during rate hike cycles. But going into a rate cut, it always goes up. And then once the rate cuts start happening, it starts to roll over. So once the stock market rolls over, I think then you're going to start to see more interest in gold stocks.
If the stock market rolls over, doesn't that pull down the gold stocks though? Because gold stocks are stocks, and we have seen that correlation as well.
Yes, if you see a stock market panic, absolutely, you're going to see the gold stocks hit along with everything else. And you'll probably see the gold price hit too as margin calls. You know, people have some big profits in gold, so you probably see the gold price hit as well. But historically, it's the gold sector that turns around first when you see stock market panic due to recession. I mean, look what happened in 2008. We had the gold stocks do a spike low in October of 2008, and the stock market just kept going down until March of 2009, while the gold stock started to go up exponentially. So that decouple happened 6 months before the stock market finally bottomed. So I mean, I don't know if something like that's going to happen this time because, well, last time the safety was the US dollar. I don't see safety being the US dollar this time. I mean, you take a look at the US dollar index, it's threatening that 100 level. That's a key level. And if it breaks 100, you could see the gold price run to 3,000 pretty quickly.
Well, Dave, one topic I'd love to get into with you is that we were all just in Beaver Creek and we all just sat through dozens and dozens of presentations. And I know you follow a lot of the development stage companies pretty closely in the Junior Miner Junky, and you're looking at who could be the next takeover candidates, who could be the next producers. But I'm looking at these economic studies these companies use, and some of them are still using very antiquated numbers, conservative, $1,400, $1,500, $1,700 gold. But as we're saying, we're pretty close to $2,700 gold. That's $1,000 above where some of these companies are using or more. Should the base case be closer to where the consensus estimates are, which is somewhere in the 1950 to 2050 range? And should companies do a better job of marketing to their strengths and at least showing some kind of a spot comparison? I finally started seeing in Beaver Creek some companies using $2,500 gold and $30 silver in their sensitivities on their studies. Do you think the whole sector could do a better job of playing to their strengths?
Well, I think the whole sector could do a better job of marketing, period. But to your point, given to where the sentiment is in the sector right now, I think a lot of these companies still use that lower base case to show investors that, hey, our gold project is so good, it's still very economical and high margin at $1,500, $1,600 gold. But I think that maybe they should raise it to at least 18, 1900, maybe 1950, and some of them have. But what a lot of them are doing, they're also doing the numbers at higher gold prices. So they'll use a base case, and then next to them, they'll show what the numbers are at 2300, what the numbers are at 2500. So I think that is happening also, and I think that's good for them to do that. But as far as raising the base case, that would be a good idea to at least raise it to 1950, 2000, somewhere around there.
Dave, does it need to be the majors that start to maybe market differently? Because as much as we're talking about how great these companies are doing now, it's because the gold price has gone up. It's not like these guys have figured out something new, a new way to cut costs or anything. The gold price is finally going up. So yes, I guess the gold stocks need to get out there and tell their story a bit more, but we all know they're just telling their story to all of us, the investors that have been in here for a while. And quite frankly, investors, when they enter a sector, don't come into the juniors or even the mid tiers. They go into the majors. Do the majors need to show more leadership, or do you think that they're okay just sitting back, making money, letting the rest of the sector and a lot of the juniors continue to struggle?
Yeah, I think they need to do a better job of marketing to retail investors. I mean, we need to get retail back into this sector that left like 10, 12 years ago. And back to your point of the base case rising, I think what they should also do is raise the discount rate. I mean, most of them, almost all of them, are still using a 5% discount rate, which is a fantasy. That's never going to happen again. Some of them are starting to use 8%, but 5% is just not going to happen. So if you're using 5%, you're not given a real economic number for your study.
To that point, Dave, We hear a lot of times that people can just run their own numbers, but people are inherently lazy. And most retail investors don't know how to dissect balance sheets. They don't know how to understand geology. They don't know how to understand. It's a very complex sector to understand. If they're buying NVIDIA, I don't think they understand how the chips are made or what goes in the chips. I think they just know it's going up. If they're buying cryptocurrencies, I don't even think they know what's behind it. They just know it's going up. In this kind of environment, it would behoove companies to actually just make it simple for people and tell them, hey, we're making money at today's prices. Could we simplify the message some?
Yeah, absolutely. That is a great point because it's such a technical business. Narrowing it down to some simplifications would be a really good idea. And I saw a few of these presentations back at Beaver Creek, and I know it's difficult to get enthusiastic when there's only 5 or 6 people in the room. But a lot of these companies that are doing these presentations, they're not very enthusiastic about their project. So they're not showing the enthusiasm anyway. So that needs to change also. I mean, we need to, and they need to start using social media platforms more often also. And a lot of these companies don't even use all the social media platforms available to promote their company.
So, Dave, do we just need to accept that, look, gold is a sector that is around and has been around, and companies are doing better, and we might get some more money coming in, but it isn't one of these new, exciting sectors that draws in all these other investors, and that's why maybe it will remain a stock picker's market, even when we have this trend and this momentum that should, rightfully so, just that alone draw investors in to the underlying stocks. Investors are playing the metal. Maybe they just don't care about the stocks, and maybe they just won't to the same degree they did 20, 30 years ago.
Well, I think if you could narrow it down to this, investors are fearful of what might happen in the marketplace, geopolitically, macroeconomically. So they're buying the metal, but they're not in fear enough to where they want the leverage in the gold stocks because they still have leverage in the stock market. So I still think it comes down to the stock market needs to roll over. They need to start rotating their profits into something else that's been going up while the stocks are going down. I mean, that's how I originally found the sector in the first place back in the early 2000s. I'd lost a lot of money in tech stocks because I just got into the stock market not knowing what I was doing because my friends were making all this money and they didn't know what they were doing. So I thought I could do the same thing. And I promptly lost a lot of money. And it was a great lesson. It was the best thing that could ever happen to me because it made me sharpen my pencil and say, I got to get down to business and start to learn how to make money in the stock market. Okay, what's going up now while everything else is going down? And I came upon the gold sector, especially the junior sector. So I think people need a reason to search out this sector, and they haven't got it yet.
Well, Dave, usually the reason people search out any sector is momentum. I don't think people got into cannabis stocks because they understood the intricacies of growing the plants or the soil. I don't think people got into cryptos because they understood proof of work on computers. I think that they want to see it momentum. Does it need to start with the ETFs? Because that's usually where a sector starts, and then people would become more stock pickers and move down the food chain. Do we need to see a breakout in the ETFs that's sustainable?
Well, we're seeing it right now. We're seeing both GDX and GDX is breaking out of a 4-year resistance, and GDXJ is breaking above 3-year resistance. We haven't had a weekly close there yet, but it looks like it's going to happen this week. And a monthly close would be, and a quarterly close would be even better on Monday. That might help. But we still really haven't seen the volume either. The volumes are still pretty low, even on the breakout.
Yeah, that's so crazy. When you think about at least monthly wise, GDX has been going up for 6 of the 7 last months. 1 month was June, that was just a very shallow pullback. Some of these gains have been 20% a couple of these months. So, look, momentum is here. The last time we saw this kind of momentum was back in 2016. That rally only lasted about 7 or 8 months. This one seems to have, yeah, but it was sector wide, right? And everything was kind of jumping at that time. Now this is much more selective. But to your point about volume, volumes have decreased ever since that March reversal. Why is that happening? That doesn't make sense.
It is. If you take a look at GDX and GDXJ, since the COVID spike, volume is almost half as much as it was before that spike. And if you go even further, bring up a 25-year chart of the TSX Venture, of the Canadian Venture Exchange. volumes have never been this low, ever, with the gold price never being this high, ever. And it's 50% juniors. The venture is 50% juniors.
So is that a problem with the Canadian markets? We all know how much Canadian markets need to pull this higher. Is that just because Canadian markets are broken and US investors don't seem to care?
Well, they've made it really difficult for U.S. investors to partake in private placements. I'll tell you that. They've done a bad job of marketing their product. It's really interesting. If you'd have told me that the gold price would be screaming up towards 2,700, and yet we still haven't had a sector-wide response in the mining sector to it, it'd still be a stock picker's market. I'd have said you were crazy, but that's what we have. We still have a stock picker's market, even though we have the gold price almost at 2,700.
Does this mean it could be a more sustainable, longer term bull market because of how slow this is happening rather than some of those last so-called bull markets over the last decade that lasted, what, 6, 7 months?
Yes, I do, and it's finally going to get recognized once it reaches a certain point, but I don't know what that point is. I know the recognition is coming because I mean that's the way markets work, right? The pendulum swings in the uber bullish direction, and then it starts to come down, and then it swings to uber bearish, especially in this sector. I mean, if you take the junior space, several of the stocks they usually go up a lot higher than you would expect. And then on the downside, they go down a lot lower than you would expect. So it's that pendulum swing. We just haven't got that. We haven't got that aha moment yet in the sector. And I don't know what it's going to take, what gold price it's going to take. I thought it was going to be 2,500, and here we are at almost 2,700, and it hasn't happened yet. But I still think it's a big reason is because the stock market is making all-time highs right along with the gold price.
Yes, it is. Look, it's not just gold that's moving up, but gold has had its momentum. It's finally a momentum trade as well. Some of the stocks are doing well, but again, it's maybe 15% of the stocks out there. Maybe this does mean it's a longer term bull market. Maybe it also means that this is just the new gold market where you have to be a stock picker because, well, there's other markets out there and people are picking stocks in other markets as well, not so diehard about just the precious metals sector. Who knows, Dave? It's all questions that honestly nobody can truly answer. Only time will tell. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Dave, always great chatting with you. Thank you.
Thanks, guys. Always great talking to you too.